Welcome back, squad, to another video on cryptocurrencies, and today we're going to talk about the BTC bear market. Now, as you guys know, the price has just been plummeting lately. It's been dropping ridiculously low, and we're approaching our last line of support at about 3,200 US dollars. So I wanted to dive into a few things today and just take a look at the market quickly and what I'm doing about it. How am I surviving this market? You know, I definitely want to talk about that. So as you can see here, everything is dropping in price again. We're down to like 3,700 here, down 7%, and it seems to fluctuate every day. So Bitcoin seems to be within the range of about 3,600, 3,500, all the way upwards to about 4,100. And that's pretty much where it's been having its price action lately. Now, you'll see a lot of the other coins are just like dirt cheap right now. Like Monero is 52 bucks. Ethereum Classic is $4. Like it's so cheap. All of these wicked projects that are doing so much development are going for so cheap. And I think it's tough not to accumulate some in this market, right? So I started mining Ethereum in 2017 around May or so, and I was able to mine about half of an Ethereum in about two or 3 days. Half of an Ethereum I was able to mine. Probably quicker than that, but anyways, nowadays, if you try to mine Ethereum from profitability right now with that same hash rate, I'd be getting like 0.04 Ethereum, and so it's ridiculously hard to mine Ethereum and still have it be profitable at this point in time. Now, one project that is going back to the same profitability that it was before the big market pump was Ethereum Classic. So if we just go over to Ethereum Classic quickly, all right, you can see here, this is where I was kind of looking at, because I got into Ethereum Classic approximately about April or so, about $3. Right, and we're seeing about the same price range. So about April 28th, it was $4.85, right? And right now it's $4.29. So it's about that same price range as it was last year around April. Now, profitability is approaching that same area as it was back then as well. So when I look at what to mine, with a 480 megahash hash rate at 1800 watts for power and 8 cents per kilowatt hour, we're getting about $1.41. But what matters isn't, to me anyways, what matters isn't the profitability into fiat. It's about how much ETC I can get per day, right? Because I know what the value of the coin is for me. It's worth a lot more than $4, right? And for mining ETC with this hash rate, you can get 1.119 ETC a day. And when I started mining Ethereum Classic back then, that's approximately what I was getting, maybe 1.5 Ethereum Classic a day. So I like to see that because it allows me to accumulate a lot with mining rather than purchasing power. Right, and Ethereum is dropping down in price substantially lately. It's like $107, but the mining difficulty is still through the roof. So it's not my ideal project to be mining right now. Now, I came across this fantastic article that I really wanted to share with you guys today because I've known about this for a while, but I didn't know how exactly to express it on my video. So now I can talk about that and have it come out clear and concise. So in this article, they're basically talking about, are institutions really buying cryptocurrency right now in this bear market? Well, here's what Jake Chervinsky wrote. Investors with Bitcoin trading under $4,000 retail. Should I sell and buy back lower? Should I open a short? Should I just give up? Is it going to zero? Was this whole crypto thing a scam after all? Institutions, please keep selling us cheap Bitcoin. Thank you. Okay, that's pretty much what it is. And I'm just going to go into some awesome notes here in this article. So, if institutional investors have been accumulating Bitcoin over the past month, then the price of BTC should have increased rather than plummet by more than 35%. See, now that's what the regular average Joe thinks, but if you have $2 million, $3 million, $4 million, $100 million, you know, you're not dumping it into the market to raise the price. That's not what you're doing. You're purchasing slowly over time so that you can buy more of that asset over time without affecting the price, right? So if you were to jack up the price, you would effectively be purchasing less of that asset because you caused that price action. Okay, now Chervinsky explained that professional traders and institutional investors are highly cautious in accumulating new assets and often invest in a way that it has minimal impact on the short-term price trend of the asset or the currency. So, and that is completely accurate. I didn't know exactly how to explain that to you guys, but I've known that this has been happening for a while, and you see it in the markets, and it's completely... it comes across completely transparent in my mind anyways. So the problem, however, is concluding that because institutional investors are buying, price will immediately go up. Professional traders are experts at accumulating assets without affecting the market. To me, I think that is a good trader. If they want to affect the market and have the price drive upwards, then they're going to do it at a time where it's mostly beneficial for them, right? Otherwise, they're not going to do it. They're going to accumulate at low prices and get as much as they possibly can for their money's worth. So none of the investors and traders I've worked with take naked long positions on speculative assets. When they buy spot, they simultaneously hedge in other markets to reduce risk. Hope has nothing to do with it. So this is an awesome article. I highly suggest you guys take a look at it. I will link it in the description of the video. You guys can check it out. But this is an awesome concept that everybody should definitely understand, is that institutional investors are buying in very inconsistent volumes, but also not in high enough volumes to project the price upward. Okay? Now, if we look at the hash rate of Bitcoin, you can see from January 2017, it was down all the way. It was just dirt, right? And ever since then, in a year, it jacked all the way up. And now it's just dropping off again. And I'm kind of curious to see where it's going to stop. But basically what's happening is all of these miners, especially in China, are basically just being thrown out. You guys, if you haven't seen this Twitter video yet, I highly suggest that we check it out. Look at this. All of these ASIC miners just in piles at the facilities. They're dumping them off shovel load by shovel load. You know, and it's just because they're not profitable right now. People are losing money, large amounts of money, by running these. So if you were to use an S9 miner, this is what your profitability looks like in this market right now. So your profit per month is negative $91. So you're losing like 100 US a month, right? And per year you're losing about $1,000. So it's ridiculously steep right now. And it's not realistic to be running them. Thus, this huge pile of ASICs, right? Now, the beauty of this is that if you are a GPU miner, this isn't happening to you. Your GPUs have alternate use cases. You can use them for virtual reality. You can use them for gaming. You can build rigs and then resell them. The list goes on and on and on. You can do lots with them. It is still profitable. If we look at Monero, if you have 12 RX Vegas right now in this market, you can mine Monero and you'll be netting about 0.125 or so Monero a day, which in profit is about $3.28, but it's still a profit. And like I said, I don't look, for me personally, I don't look at the fiat profit on these coins, because I know that the coin is worth a lot more, or it will be worth a lot more, right? Especially with all of the development that's happening with it. So accumulating 0.125 Monero a day is awesome. You're getting, so basically, what is that, like 7 days or so, maybe even less, you're getting a Monero. So every week, that's like 4 Monero a month. And Monero was at like 300 US a coin. So like it's unreal. And you're still generating some of a profit, okay? You're still paying off all of your power and still getting a bit of a profit. So that should kind of set your conscience at ease. But if we look at Ethereum Classic, like I said, you're getting 1.119 Ethereum Classic for a net profit of $1.41. But I mean, an Ethereum Classic per day, I have this thing where if I'm getting one coin a day, you know, I'm doing pretty good, right? I don't know why. It's just, it's a good feeling. Yeah, whether you're doing Monero or you're doing Ethereum Classic, those are definitely good choices in the long run, because that's what it is now. We're in this heavy bear market right now, and you need to be in it for the long run. So now let's answer the question, what am I doing in this bear market? How am I surviving it? Well, what I'm doing is I'm keeping my GPUs, and I'm mining the crap out of crypto right now, because I'm getting crypto at a very fast rate, because people have pulled their miners off of all of these projects, off of all these coins, which leaves a lot of room for the small GPU miners like myself, right? So get in there, mine as much as you can, accumulate as much as you can, just like the Bitcoin miners did back in 2010, right? Accumulate as much as you can, and then just wait, right? Wait 2 years, maybe a year and a half, maybe 4 years, whichever way it goes, we don't know. And just have that waiting for that moment when the projects do fly up because of mass adoption, right? We have to be prepared for that, and I think it's still profitable. It's still technically profitable to do GPU mining. Is it majorly profitable? Not really, but in regards to gaining crypto, yes, it is profitable in that sense. We're getting more crypto now mining than we were back in February earlier this year, of course, right? So that's what I'm doing. Some people have pulled their miners off. It all depends on how you feel about mining, and whether you're a speculative miner, or you look at smaller projects and you like to mine those and get as much as you can and fire it out to the market. There's lots of things that you can do with your GPU miners, and if you want to take them out and build computers and sell them, you can still do that, right? You're not locked in with ASICs. So anyways, that is how I am handling this bear market. I am gonna mine the crap out of it, get as much crypto as I can before these prices shoot through the roof. And whether, like I said, whether that happens 3 years from now, 6 months from now, a year and a half from now, at least I have something and I'm prepared for it. So anyways, if you guys have any questions about this bear market or what you guys are doing in this bear market, I would love to hear about it. So thank you guys so much for diving into the video with me today and going over this bear market, because I do believe that this is something that is affecting a lot of people out there, especially the people that have taken their life savings and dropped it into crypto, right? It is quite hectic right now. So if you guys want to chat, definitely toss some comments down below and I will get back to you. Thank you guys so much for tuning in, and as always, stay regular.